Hello, everybody. I wanted to make a video today and talk about the insiders and why they love the current financial system and they don't want to change it. And of course, they love it because it's made them all rich. We're going to talk about all of that in a little quick video. So, the current financial system, the fractional reserve system, was established December 23rd, 1913. Before that, it was basically a Wild West, not quite, but the Fed did not have as much centralized control as they now do. In giving themselves all of that control and establishing the Fed, they were now in control of the interest rate, and the issuance of money largely was up to them. This leads to something called the Cantillon effect. So let me brief pull up this article. So this article is from April 9th, 2020. As you guys remember, that was when the COVID stimmy started going crazy and the federal government basically just started pumping massive amounts of liquidity into the system. This article does a really good job explaining what happens when they do that. So, 3 weeks ago, government passed giant multi-trillion-dollar bailout. Supposedly, it was money to host the stakeholders, including hospitals, states, Wall Street banks, big businesses, and the unemployed and small businesses. Now, you're saying, oh, that's great. They inject this money to bail out the hospitals and all these other businesses and things. Yeah, that's great, but the insiders have this information first. So, they're the ones buying here right before the announcement of all this news. Or not there. Here, this is the 2020 crash. They're the ones buying this right here, this giant dip right before they know all of this capital is going to get injected into the markets. And of course, prior to the markets getting shut down to begin with, they sold off everything here. Now, this is a noted effect that has happened a lot. So let's go back to the article though. So when they did this, within a day, the NASDAQ rose 37%. That's a lot. A lot in a day, especially after selling here, buying back in here, and then it jumping 35% a day. Now, this is the Dow Jones. This is the NASDAQ. NASDAQ looks something more like this. Ignore the points, but it was here, dropped way down here, and then went way, way, way up. I'll actually pull up a chart of the NASDAQ real quick. So here's the NASDAQ. As you can imagine, they sold right around here. Prior to all of the COVID lockdowns hit. Boom. 30% drop in a day. So now imagine you sell your $10,000 worth of NASDAQ stocks here. Add a couple zeros to that though. That's the insiders. And now you hear, oh, the Fed's going to do their giant money dump into the market. And so you rebuy here, take that $10,000 that you didn't lose 30% of, and you rebuy here, and you hold it all the way again until November, right here, which just so happens to be the very, very top of the market. And now here is another article. CEOs and insiders sell a record $69 billion of their stock, and yet the year isn't over yet. Now, this is from December 1st, 2021, right after the market top. The Fed and all the insiders were selling all their stocks here. Why? You might be asking, why is there this huge dip right after that? Well, it's not just because they were selling their stocks. It was because the Fed announced their interest rate hikes, drawing liquidity out of the markets. So imagine now you have you're selling here, you're buying here, riding it all the way up, selling here, and now they're just waiting until the Fed announces, or they're waiting until they get the information that the Fed's going to reverse policy, and they'll buy back in again over here. This isn't a new phenomenon, and this is called the Cantillon effect. So the Cantillon effect talks about there's kind of like a double whammy when it comes to this stuff. Not only are they selling here, buying here, selling here, and buying whenever this next bottom is going to be. These 18th century French banker named Richard Cantillon noticed this early version of the phenomenon and wrote a book. His basic theory was that who benefits when the state prints a bunch of money is based on the institution's setup of that state. In the 18th century, this meant that the closer you were to the king and the wealthy, the more you benefited, and the further away you were, the more you were harmed. Money, in other words, is not neutral. The general observation that money printing has distributional consequences that operate through the price system is known as the Cantillon effect. So now, what does this mean? Let's go down. He explains it really well here in this article. In Cantillon's day, the basis of money was gold. So he wrote about what happened when a nation state discovered a gold mine in its territory. Increasing the amount of gold in the realm would not just increase the price levels, he observed, but would change who had the wealth and who didn't. As he put, doubling the quantity of money in a state, the prices and products and merchandises are not always doubled. The river which runs and winds in its bends will not flow double the speed when the amount of water is doubled. What does he mean by that? So you have your money in the system now and you double it. It's not like everyone is just getting twice as much money. The people closest to the inside are seeing a very much larger proportion of that new money go into their pockets. So now let's go down further and explain this a little more. Cantillon went on to discuss how the money would flow, basically noting that rich people near the mine would spend it on 18th century luxuries like servants and meat pies, prompting general rise in prices. Eventually, the money would go into the populace, but until it did, working people would have to pay higher prices without accessing the new money that the mine owners had. So this new money gets injected. The insiders now have this new money. They've already bought and sold all of their stocks at the tops, highs, and the lows now in the current system. They have all this new money now, and the price of goods and services has yet to increase. So now they have, instead of having $100 in their pocket, they have $200 in their pocket, paying for those same goods and services with more money, while the general populace still has the same amount of money in their pockets. So the price of consumer goods has yet to rise, yet all of these insiders now have X amount more dollars. What does this mean? What this means is that the insiders, the people closest to the Fed, the politicians, the CEOs, the business owners at the very, very top get this information and they sell their stocks in the beginning, get access to all of that new money, and buy at the bottom before all that new money gets injected. And then they have the highest benefit. And now you can see this effect clearly when you just look at the net worth of these politicians who have been lifetime politics. Hillary Clinton, been in politics longer than I don't even know how long. Longer than I've been alive, longer than my parents have been alive, longer than most people have been alive. Net worth, $120 million. Nancy Pelosi, been in politics before Jesus was born. $120 million net worth. Joe Biden, net worth, according to this, $9 million. At the end of his presidency, it's going to be a lot more. And you see all the stuff that he's doing with his son. Inside, basically trading off his name, $9 million. Mitt Romney, $190 to $250 million net worth. Now, these are from Google, so take them with a grain of salt. Point is, all these politicians are extremely rich, and it's not because they're providing anything for society. It's because they are selling here, buying here, selling here, buying whenever the next bottom is. This isn't a new thing either, as I said. It's from way back in the day. Let's go back. Mitch McConnell, been in politics longer than God. $150 million net worth. My point is, the current system is set up off a 200. I didn't even mention that. All these politicians, $200,000 salary, they're bringing in now $150 million net worth. My point is, they love this current system and they don't want this current system to change. Why would you want it to change when you know everything that's going to happen? Investing for most of us normal people is a risk game. And everything these days is now based off what the Fed is going to do because they almost entirely control the market when it goes up, when it goes down. We are just not privileged enough to have the information on when to sell and when to buy like these insiders do. That's why we all need to watch the Fed a little bit closer and advocate for a new type of system that does not benefit these insiders so much. That's why I am generally against the centralization of all this power and the Fed having this much control. I hope you learned a little bit from this video and this inspires you to go and research it a little bit more. This is just the tip of the iceberg. Going into the actual nuts and bolts of the system is a whole nother level of complication. But at its core, this is what happens with our current system. Insiders sell at the top, buy at the bottom, and they get access to all that new money first, buying the goods and services before they appreciate in price, while we are still paying for them with our less dollars than they have. Hope you guys enjoyed the video. I will be back soon.